A Moment of Zen is sponsored by Fintech TV.
Fintech TV, the newest streaming channel focused exclusively on the business of blockchain, digital assets, and sustainability. Broadcasting from our studio on the floor of the New York Stock Exchange with daily reports from NASDAQ, global expansion, and 24/7 coverage. Become part of the launch. Head to fintech.tv/invest. Fintech.tv/invest.
Tune in to A Moment of Zen, Saturday nights from 9 to 10 p.m. on 710 WOR, the voice of New York.
Now, the first month of 2025 ushered in a new administration at the White House and saw crypto major Bitcoin advance by 9%. We are looking at the Bitcoin prices lower on this Monday morning. The Senate Banking Committee, chaired by Senator Tim Scott, will hold a much anticipated hearing on February 5th, and this will be to discuss debanking. The hearing does follow accusations that financial regulators have unfairly pressured banks to cut ties with crypto firms, political figures, as well as conservative aligned businesses. This does come as a new administration has taken office alongside expectations of a more favorable landscape for digital assets as well as crypto legislation. The acting chair of the FDIC, Travis Hill, spoke extensively about debanking at an industry event, telling bankers that the agency must, quote, make sure our regulatory approach isn't pushing banks to debank law-abiding customers. Hill is critical of the agency's past use of pause letters, vowing to establish clearer guidelines for emerging tech and remove discriminatory practices. And last week on Fed Day, Powell stating that the threshold for banks engaging in crypto is higher due to its newness, but the Fed remains open to innovation. Joining me to weigh in is John D'Agostino, board member of AIMA and also head of strategy at Coinbase Institutional. So, John, happy Monday. Thank you so much for joining me. We have a lot going on, but I do want to focus on debanking when it comes to crypto and digital assets. So, do you think the distancing over concerns about bank safety, money laundering, as well as financial risks isn't just a reflection of a disdain for crypto overall?
Hi, Remy. Great to be here again. Sorry it had to be such an apocalyptic day, so we will weather through. So yeah, I mean, look, this is actually kind of fascinating. What we've seen since even the last time I was on the show is an extraordinary turn. So this concept of debanking went from something that was relatively unknown to wider audiences, but well known within the industry. And then Mark Andreessen goes on Joe Rogan. It becomes kind of popular knowledge. Then there's a short period of, hey, maybe this isn't real. There's some pushback. And then we go from that within the space of 10 to 12 days to the comments you mentioned from FDIC Chair Travis Hill. I'll point out Jerome Powell also on January 31st acknowledged that there's no role for debanking. And then we had Cynthia Lummis, who is the chair of the new Senate panel on digital assets, go so far as to say that anyone at the FDIC who gets rid of evidence around debanking will face prosecution. So that's a really dramatic shift in tone and messaging and narrative in the space of 2 weeks. So I think that the argument that this is a hallucination or something that didn't exist, never existed, that's pretty much been completely debunked. And now it comes to, well, exactly what happened, how severe was it, and to what degree should there be accountability and consequences for those individuals who committed it.
And I'm glad you brought that up because there are a lot of expectations as we head into 2025 regarding the regulatory landscape. But on this Monday morning, I do want to take a look at where we are in terms of crypto prices as well as the strategic Bitcoin reserve. So for crypto majors, Bitcoin and ETH, we are looking at a pullback this morning. But in terms of a reserve, several U.S. states, including Alabama, Arizona, Florida, launching initiatives for Bitcoin strategic reserves. And Arizona and Utah are also advancing in the process. Now, President Trump did order the creation of a digital asset working group, and they're tasked with exploring a U.S. crypto stockpile, but the order doesn't provide further details. So what do you expect to see when it comes to reserve in the coming months here in the U.S.?
So I expect to see a growing clarification of what that means effectively. So I think there's some people in the Bitcoin and cryptocurrency world that were a little bit disappointed at the less than specific language regarding a Bitcoin strategic reserve and also how that Bitcoin would actually be accumulated and whether it would just be existing stockpiles not sold or new assets accumulated. So I think perhaps that was a little bit too much to hope for in the first week. But what we have is serious momentum, not just at the state level, but also at the federal level. There is, again, the Alumnus is leading this charge and leading the effort to examine how a Bitcoin strategic reserve, which again many people believe will fundamentally strengthen monetary policy, improve the overall balance sheet of the U.S. government, will be a decidedly good thing for the country as well as for Bitcoin holders. And that sort of will be clarified over the coming weeks. I think what's important to note is that as that clarification ensues, the rest of the world is going to be watching extremely closely. No one wants to be front run on a U.S. mass purchase of a finite scarce asset like Bitcoin. So I think you'll see a little bit of brinksmanship as countries recognize if the U.S. does commit to this as policy, they have to be at least on time with the U.S., if not ideally before, in terms of making those acquisitions. So everyone will be watching it very closely at both the state, federal, and international level.
And finally, John, I do want to ask you about artificial intelligence. So we know the focus last week was on DeepSeek, but when it comes to digital assets as well as crypto, we're paying attention to what all of this means, the convergence of artificial intelligence and blockchain technology. All of this can mean opportunities, but from combining AI's capacity for data analysis as well as decision-making with blockchain's secure, decentralized structure, there are a lot of opportunities here. So what are some key developments that are likely to shape adoption moving forward?
I think when you think about the intersection of AI and blockchain, it comes in a number of different ways. The way that probably gets people most excited is this notion that as AI agents become more autonomous in their decision-making ability, they will have to transact with each other at speeds and during times that would be inconvenient for humans to be able to operate at. Your last guest energetically talked about some of the problems associated with 24-hour, 7-day-a-week trading. A lot of that is the human capacity to work those lengths of time at that duration. Well, AI agents and computers don't have that issue. So as you start to see, and I'll remind, he pointed out the problems with converting traditional markets to 24-hour trading. Well, Bitcoin and cryptocurrency has been trading 24/7, 365 since its inception. And has worked really, really well. So when you combine that proven ability to trade all the time with technologies that will be given the permission and have the intelligence to trade all the time, I don't think it's very difficult to see how liquidity and market activity could potentially increase exponentially in that world. Where are we in that? I'm not going to pretend to be able to predict the timeline for this, but it's certainly happening faster than I ever imagined it would as recently as 6 months ago.
Okay, John, well, we will have to leave it there, but thank you so much for joining me on this Monday morning, and we look forward to continuing the conversation soon.